All right, so we're going to continue on the course, and where was I? So where am I? We're right here, and by right here, I mean on the pullback after trend was confirmed. So the question is, how do you buy a pullback, right? That is really important. A pullback with trend. So why I say that's important is because that's what we're all trying to do, buy pullbacks. So that's what I'm going to focus on right now. It's based on what was covered in the last video, and I'll just explain the buying opportunity here. All right. One second. So here he says, so here we have a buying opportunity in the expectation that advance will be resumed. What he's saying, buy the pullback, all right? That's all he's really saying. All right. So what he did was he looked at certain key things. One, evidence that the advance would resume. What was that evidence that the advance would resume? It was the bullish bar with a high-end close, this one here. Where's the evidence of that? Right here. This is our first sign that the reaction is nearly over. What is the first sign? The close is nearly at the high point of the day, basically a high-end close, all right? So that's the important thing. But that by itself is not enough. Again, we're framing this in the context of how to buy a pullback, right? Further confirmation of this comes from higher support. What is the key word here? Confirmation. All right. So the confirmation of this high-end close is the bar after that makes a higher high, higher low. Okay, further confirmation comes from the higher low, which is called higher support, and an almost complete drying up in volume on a dip to the same low level on the 19th. All right. This I think this is it. 17. I think this is it. So anyway, so further confirmation of this comes in higher support, higher low, and in almost the complete drying up of volume to the same level on the 19th. All right, now I can't really read this, they really didn't make it very clear, but it's right over here. It's this region right over here. Okay, and what you can take away from this is what? The bullish indications. What are they? High and close to low volume dip to the same level. All right. So it's like, what does that all mean? It means supply is out of here. Why? Because of that low volume test at the same level. And B, demand is now in the background. All right. So that's what you need to see. You need to see supply dry up. What does supply dry up mean? It means liquidation has ended. Okay, but there's one more important thing, and that is the exhaustion, meaning climactic action. That's really important. We have evidence of that right here. Note there is also an indication, a bullish indication, not just an indication, of a minor selling climax in a somewhat marked increased volume, right? So this is very important because, in my opinion, you don't want to get in until the climax occurs. All right, now he didn't put it in the text; he put it in the footnote. All right, so we're gonna put that here. That should really be one. The climax, which is the minor climax. I'll just put M dot climax. Followed by meaning it didn't have any follow through. There was a red bar down, which was your climax bar, your minor climax bar. The next bar right after it was a bullish bar. Okay, showing what? That supply is meeting demand. All right, poor supply is meeting quality demand. Okay, that there's been a flush as indicated by the climax bar, and strong hands are entering. The CM is entering after that flush or that potential panic. Could be a panic, could be whatever. That high volume down, red bar, where people give up and exit their inventory, is now being bought. So that is what the combination of these two bars represents. The climactic bar down and the bullish bar right after it. It would not be good if you had a climactic bar down followed by another significant bar down. That would not be good. But the fact that you had a climactic bar and had no follow through and instead was immediately had a bullish bar after it is what tells you that demand is coming back into play. All right, it's the combination of the climax plus the strong green bar. After that, you have a dip. What is that saying? It's saying that the liquidation is complete, meaning that supply is complete. All right, and so I want to emphasize this because the logic is the same here. Here, what happened is instead of looking at a pullback, we're looking at a trend. So what happened here is you had panic selling. After that, you had quality demand come in, which was the majority of the volume. That volume off the bottom that made the green bar up, that was demand, meeting supply. All right. And then after that, you had lessening of volume, indicating liquidation is complete. Here, the demand that came in after the climactic low indicated that the climax has passed and the trend is quote unquote tentatively up, not confirmed. The only thing that was confirmed is the climax has passed potentially. All right, that's the only thing that was confirmed, that for the time being the climax has passed. Why? Because after the climax you had change of behavior or volume off the bottom, strong demand going up, telling you that the climax has passed. Then over here where the volume shrank, that was the confirmation that the liquidation that was on the prior wave down, all of this volume here, has now evaporated. It's gone. So that's what this is saying. It's saying that liquidation is complete. But the same logic holds. Here we took a look at this entire wave and said, okay, climax, followed by demand, followed by low volume selling, indicates the liquidation is complete. Here you have a climactic bar telling you that liquidation is happening. Here you have demand telling you that liquidation has passed. And here you have that low volume test telling you that now we know that, confirming that liquidation is past. My bad. Here I said liquidation is past, but the demand is saying not that liquidation is past, but the climax has passed. Let me repeat that. The bar down, the climactic bar down, followed by the green bar up, indicates that the climax has passed. You could also say that the upward trend is tentatively up, or that it's about to be resumed, like what Bykov said. All right, so the climax has passed is what the bullish bar is telling you after the climactic bar down. And when this bar occurs with low volume, it's telling you that liquidation is confirming liquidation has completed. So what's the whole point of this? What the whole point is to get in when liquidation is completed, because that's when the market has a shot at going up. And you have a low volume test the same level, and bang, right here. This is the higher high. That's the higher high. This same logic applies here. Right here you have climactic action followed by demand telling you that the climax has ended. Here you have the low volume test at around the same level telling you that liquidation is completed. And here's the higher high, which tells you what? All status green. That's what it's telling you. Green, good to go. Trend is confirmed. Similarly, here you have the climactic bar, and this is at the swing level, right? The other one was at the entire trend level. But at the swing level, climactic action, what is this telling you? Demand is in, that confirms the climax is passed. The dip right now with low volume tells you that liquidation is complete. Bang, the higher high. So it means we're headed higher. So the logic of the trend change is can be applied to the swing ending. The logic of the downtrend ending is the same logic that's being applied to the downswing ending. All right, I think I've beaten the horse, or whatever that saying is, enough, all right, to explain the concept in depth. All right, where am I now? Okay, now the question is, all right, wherever you get in, my thing is I'm not going to get in until probably this green bar, the higher high confirmation, right? So anyway, the point is, where do you put the stop? To ensure limitation of risk, our stop should be placed a point or so under the support. So that's the support, put it a point below it. What's the level? 140, it's about 145, so you'd have it around 144 or 143, right? Over here, if you got into extreme lows, it was put 2 points below. Over here, it's about a point below. Because here you have a tire trend, here you have about a swing. And also note, there's another very minor thing that, well, not that minor, but if you're astute, you are noticing this. And I didn't notice this before too much, but you'll notice that many times before this up rally, right? What happened? Before this up rally, what happened? Pay attention, because this happens even today. You had a spring. See that? So yes, you have climaxes. Even here, Wyckoff didn't mention it, but there was a climax right here. You see this bar? The volume on this bar is a lot. It is more than the last 3 bars, yet its volume its spread is very low. So I mean, you could say the volume is climactic because it's bigger than 1, 2, 3, 4, 5, 6, 7 bars. And it is also effortful, meaning there's a lot of effort. Why? Because look at the size of this bar. It has clustered closes and very small range. But look at the volume being bigger than 1, 2, 3, 4, 5, 6, 7 bars. So there's a lot of effort. So it's climactic volume, but effortful action, meaning small range and big volume. All right. The volume is still, I mean, you could just call it heavy volume, high volume, effortful volume, climactic volume. It just means it's a lot. Relatively speaking, it's a lot of volume. If you want to take the price into account, then you would say that yes, not only is it climactic, but it's also effortful. All right, effort reward concept. Anyway, what I'm trying to get at is there's a spring here that leads to the rally. What's here also? A spring. This is the low, this is the high, this is the lower low, and your spring. Here, this is the low, this is the high, this is your lower low, and this is your reversal. This is low, high, lower low, bang, reversal. So if you're astute, you're noticing that there's springs and upthrusts all over the place. Even here, you have a high, a low, a higher high, and low and close. What's that known as? An upthrust. And these are the upthrusts as what's it David Weiss would say. All right, I'm not talking about springs and upthrusts in big ranges. All right, they don't necessarily have to be in big ranges. It's a low, a high, a lower low, and then bang, reverse. They're all over the place. I've been over here. It's like down, down. I'm not sure if this one is it, but anyway, so it's important to note that as you look for climactic action in this place, it also has a spring. As you look for climactic action here, it is also in the spring position. As you look for climactic action up here, it is also in upthrust position. So these springs and upthrusts, they are found, the minor ones, they are found around the minor climaxes. That's a very subtle point, and you're not going to hear those details, but anyway, where was I? Now observe for the next 13 sessions following the 23rd. The market fluctuates in a very narrow range. All right. So over here, the market goes up. Oh yeah, I have to talk about this also. This brings the market up to a fraction of the high figure of January 9th, where on the 23rd, a volume surge after 4 days is a climax. Again, the concept of a climax comes up. This entire story is about climaxes, or this entire study is from really that perspective. So which bar he's talking about right here? We talk about this bar, this is also your climax. Now here's the point about climaxes. They don't necessarily need to turn trend. They can also be just pauses. They can be pauses for accumulation, reaccumulation, or redistribution. Here, this was a pause. This climax set up a pause at resistance for what? Absorption, right? So you have A, B, S. It did not create an extensive pullback. It just paused because we know that climaxes don't necessarily need to end trend. They can pause trend. And then you can have a period of reaccumulation or redistribution and then fly. All right. So you got to know that because some folks think that climax is ending action. You might have heard that term, but it's not. Climaxes can be a moment of can start the reaccumulation, or in this case, absorption. It's not ending action. It doesn't mean that the swing has ended. It has just paused, and then it's going to continue. Anyway, but there, anyway, recitation. So what's going on? What are they absorbing? We're absorbing here, the prior high here. There's a lot of buys stuck. So they have to exit, and they're also sellers selling the resistance. So all of that is being absorbed. Now, now we're going to identify when is that absorption completed. Obviously, when it pops up above it. I think it goes over here or here. I can't really see this, but it's either one of these two end bars that basically do the breakout. Right, so above this high, right? Now, here's a very important point. Now, how do you know it's absorption or not? Right? I mean, just you see a range at the resistance. So, oh, that's absorption, right? How do you know? Well, probability that this, because you might think that's distribution, right? If it's going sideways in a range high up. All right, now the probability of this lateral movement or trading range between 156, 151 areas absorption rather than distribution. So this is the comment about absorption versus distribution, may be determined from the fact that the volume remains low on the pullbacks. So that's one of the things you're going to look at when you're trying to determine whether something is absorption or distribution. If it was distribution, you would have heavy volume on the down bars, but instead you have low volume on the down bars. And takers of tapers, it should be PERS, of promptly on the move to the this one right here, February 2nd, somewhere around here. This area here, dip, dip, low volume. So low volume. And from the tendency of the price movement to narrow into a comparatively small range instead of reacting even halfway back. So the common characteristic of absorption is that it quote unquote hugs resistance. So when you're seeing it hug resistance and the down bars have low volume and they're unable to follow through, meaning you have a down bar, then you have a green bar. Then again, you have a down bar, you have a green bar right after it. What does that mean? It means the selling is being absorbed. And it's not able to react even halfway back. It's hugging resistance. And higher supports. So you want to see, like over here, you have a wedge of sorts being formed. Higher supports, higher lows, higher lows, higher lows. Why unable to really go down? Now, in you will see this, but sometimes you'll have a spring here as well. So anyway, sub-absorption is evidently completed on February 9th. Blah, 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 blah. Yeah, this gets really important because over here, volume increases to 4 million over 2 days compared to the previous volume of 1 and 2 over the past 13 days. This exceptionally large volume on the 10th 11, plus the failure to record material gain on high volume on the 11th as usual is an indication of some distribution and a setback. So take a look at the 11th, and what do you see over here? Look at all this. Look at all this high volume in here, relatively speaking. These bars probably have more volume than the last like 30, 40, I think about 30 plus bars. So what is the outlier here? It's this one. You see this bar here? It has almost the same amount of volume as the last bar, yet what is the difference in close? From close to close, it's almost nothing. So what is all of that volume meaning? If you have so much volume, but the close from close is making no progress, what does that mean? It means just like it meant over here that all that volume came in and the close to close was very little progress, over here it is an indication. And here it is an indication that there's some distribution going on. Now you're going to notice that when I talk about distribution, I'm not talking about, and neither is Wyckoff, talking about extensive ranges here. Anywhere do you see him mention that extensive range? When you see on all those schematics, there's a big range. And everybody thinks that because there's a big range, that there is distribution. And that distribution requires a big range. This is false. All right, now because we'll be getting into distribution. Here, this says that a high volume on the 11th, as usual, is an indication of some distribution. So you're going to mark this as there's some distribution that occurred here. And you'll see that many times the head and shoulder pattern at the top, the left shoulder has some distribution. It's like almost like initial distribution. Many times, if you see tops in many markets, it's not just the top, the head where distribution occurs. It's on the left-hand side that you have preliminary distribution. So I guess I can call this initial or preliminary distribution, but whatever you want to call it, the idea here is that there's some distribution that took place in this bar right here. How do we know that? We know that because the volume is very high, yet the thrust from high to high has shortened, and the closes from close to close, from the bar before it to the current bar, has no progress. It's almost the same. So clearly that is an indication of some distribution. Does that mean you go short? No. Why? The trend hasn't turned yet. And as you know, on the way up, you could have profit taking. You could have initial distribution. Distribution is a process. Distribution occurs at not just the same level, but different levels. As is the case of a typical head and shoulder where you have the left side and then the head. Here, this is like your left hand, whatever that left shoulder is. I don't really use, I'm just using it as a easy to understand example. So, over here, you have clearly spikes in volume. Here you might say this is the breakout, then you have this follow through, then the third bar here is where you have some selling of that upswing that occurs after the absorption, after the breakout, after the follow through bar, and then on the third bar, where volume remains high, is when sellers enter and start selling that high. Does that mean, again, that take shorts? No. Does that mean that the trend is turned? No. All that means it's a chance to sell at high prices. So if you bought down here, somewhere here, or here, you might want to sell some 25 points higher. Yeah, makes sense. On the 11th, the average makes a high of only 1 point above that of the 10th. Blah, blah, blah. Now, as we watch the supporting points of the next 5 sessions, So here, the point is that you had a low volume dip, which was a bullish indication. Again, what is the bullish indication? After this initial distribution, the market pulled back some, and in this low, look at the volume. It dips completely to almost 1 million shares, going from almost 5 million to 1 million. What do you interpret that as? Lack of supply. And what is that? It is a bullish indication. What is also that? It means liquidation has ended. What is it also? It means supply has evaporated. If you piece that together, what should you be thinking? The trend is about to resume because low volume is a indication of supply here on this pullback, and means that the bullish tendency is about to come back in, right? Or the way he says it, that another advance is coming. Okay, the market is not ready to turn down yet, even though there's some initial distribution. All right, now keep these points about distribution in mind, because I'm going to show how the top is formed. And believe me, you can try this on your current charts today and you will see the same thing. I mean, you'll see the same thing, because you cannot change the fact of buy low, sell high. Buy low, sell high is accumulation, markup, and then distribution. That is the same throughout time, whether 100 years ago or now. You cannot change that. The only way directional traders make money, they buy low and sell high now, and they buy low, sell high 100 years ago. So that's why it works. Anyway, so this says another advance is coming in on the 17th. This is an attempt to run the average up to a new high, which fails. Okay, fine, whatever. It fails, and then what happens? The close is almost on the bottom, and the volume increased notably over the past few sessions. It looks first that this might be a buying climax. All right, preceding the end of the rise. End of the rise. So we bring our stops on our long trades up. He's thinking that, okay, maybe this 1 bar rally right here, that this is your climax, but it's not. It's the problem. Okay, I already went through that. Because look, it says it looks at first as this may be a buying climax. It seems to be, but it isn't. What bar is he talking about? He's talking about this bar, which has more volume than 1, 2, the prior 3 bars, and then closes low end. But he says, again, it seems to be, not that it is. And what happens after that? It's supported the next day, meaning it doesn't break down lower. So that's bullish. All right, why? Because it has no follow through. Why? Because you had this reversal bar and heavy volume, and what happened after that? A green bar. What happens after that? It goes up. All right. Now, here's the point here, okay? Pay close attention to this. All right. The volume here increases. It goes up to a new high. Here, the breakout. You got the breakout right there, right? And then continues here. This is when it hits that 5 million mark right there. That's the biggest volume on the chart, right on that bar. It is at the top of a number of bars. Again, it is at the top of a swing, all right? So you have a trend making higher highs, and you have the most amount of volume on the highest bar at the top of a trend. Red flag. Okay. Why is it a red flag? Because of a failure. What is the failure? It doesn't hold. See that? Makes a lower high, lower low, lower close. Why is it that the biggest volume on the chart on this up bar is immediately followed by a red down bar with a lower high, lower low, lower close? A bar this strong, a bar with that much volume, a bar that making new highs is followed by an opposite bar with high volume, lower high, lower low, lower close. Problem. It does not hold. So what is the failure? Its inability to hold. It thrusts up into a new high and has what's known as heavy turnover, okay, which is characteristic of distribution. What does that mean? When you have big volume on a high point and it doesn't hold, and you have a reversal bar after it, it is an indication of heavy turnover, which is a characteristic of distribution. A key characteristic of distribution is when the high volume bar at the top doesn't have follow through and is taken out, meaning the bar after it or a couple of bars after it, the low is taken out. Here you have that situation. And this is a characteristic of distribution. It's not just that box. It's not just the point and figure box. The key characteristic of distribution isn't the shape of a box. It is when you have high volume on a bar at a top that doesn't hold and doesn't have follow through and is taken out, in this case, by lower high, lower low, lower close immediately. Okay. And you lose about it's the close is less than the prior 2 days. So this bar's close is less than the high volume distribution bar and the bar before it. Lower high, lower low, lower close than the prior two closes before it. What the indication is supply is overcoming demand and confirms that the previous indication of a probable reaction. All right. And this is another key point. All right. Over here, it's a little bit hard for me to see this, but typically what you will have is a climax did over here, followed by a change of behavior. This is how the market, folks, works. I can show you this, and I will show, you know, on intraday charts. I'll show you on. But anyway, over here, what do you notice at both the top and the bottom of the trend? Here you had climax followed by a change of behavior or volume off the bottom or sign of strength or whatever. Climactic low followed by buying. Here climactic low, climactic high followed by selling, supply, change of behavior, sign of weakness, change of character, whatever you want to call it. This is the first time supply has been so high in the entire trend. And it is also, if you take the same logic that he talked about, it is helping confirm that the climax has passed and the trend is tentatively down. It confirms that the climax, quote unquote, the buying climax, has passed and the trend is tentatively down right there. Tentatively down, which will be later be confirmed by, you guessed it, low volume pullback and a lower low. So the logic is basically the same. The idea here is you have a distribution bar, which is your climactic bar, that cannot hold and is immediately followed by a change of behavior, a bearish change of behavior. And here comes the word, pronounced change in the market's behavior. It is the first time, and I use the same words when I talked about the accumulation, first time the buying is that much volume and that much distance, first time that much volume, right, has remained so high on a reaction. That is your bearish change of behavior, and that is also your sign of weakness. All right. All right, the fact that prices cannot continue to advance into new ground, combined with a comparatively high volume, leads us to conclude that the big fellows are unloading. And the relatively large volume on the reaction of the 27th indicates that they've filled up all the buyers on the way down from the highs with what they've been unable to sell on the range from 168 to 173. So this is a key bar here that I want to go over. Let me see when it gets to this. Oof, can't even read this. We must bear in mind that the prices have now advanced. Yeah, right. I mean, there's another point here that this move is hypodermic, green, 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 very hypodermic, and the angle of the trend accelerated here, right? So it accelerated into the climax and all that. And he calls that the application of hypodermics. So hypodermics is just, it's a quick run up. Right? That's it is, with a lot of speed, trying to end the trend. There's a key thing I want to bring up. Here, on March 2nd, if you haven't paid attention to the rest of the selling or don't know whatever, here, if we have ignored all previous warnings of a gradual weakening of the technical position, we cannot ignore the decisive breaking of the very backbone of the advance. This, folks, is the trend breaker. This right here is the bar that broke the back of the uptrend. Just like here, this is the bar that broke the back, this one here, This bar broke the back of the downtrend. This bar breaks the back of, actually, I'm not sure if this was the bar that broke the back of the downtrend. I believe it is because of the way it took out the high and confirmed trend. But according to Wyckoff, this bar here, this one here, that is definitively the bar that broke the back of the uptrend. All right, but in my book, this bar here is also the breakout bar that broke the back of the downtrend. And here, this is the bar that broke the back of the uptrend. It doesn't really take out this low here, but it takes out the first. It's a small little pivot, all right? And there you go. That's the line. We cannot ignore this decisive breaking. So this is something you have to pay attention to. When does the trend like legit break? All right. I mean, it is broken. Well, you can say, okay, this is climax, this is not climax, blah, blah, blah. But eventually the trend breaks. And knowing the bar that breaks that trend is very important. And it occurs after climax, after a change of behavior. Got to know that. It occurs after the climax, after the change of behavior. That sets it up for that trend break. Just so like here, after the climax and after the change of behavior, that sets this bar up for breaking the trend. All right, at this juncture, we should be ready to short more. What's he going to look for? He's going to look to sell on bulges. So what does that mean? It means you should get ready to sell on bulges by doing your, basically pullback trading. Same thing, pullback trading. All right, so and here's the point. Like the point is what level did he look at? He looked at the 50% level. If you've heard of halfway back, the idea of halfway back, where is it coming from? This is the line that alludes to looking at the halfway back level, because he says that partway rally, which is likely to fall slightly short of the recovery of about half the recent decline. What does that mean? 50% retracement. That's the level you should be looking at for pullbacks. All right. Oh, by the way, that doesn't mean just sell the 50% level. Like it just means be aware of it and see the behavior around halfway back. Do not just sell halfway back. Take a look at what happens at that level. Anything less than that could be something else. So you want to take a look at that level and see how the market behaves at the halfway back level, because a halfway back level is very normal, meaning trends normally, pullbacks normally go to the halfway back mark, the 50% mark. That's what he's saying. Not, sell short 50%. It's observe what happens on the pullbacks which normally go to around 50% halfway back. All right, I'm done till now. So there's a lot of things that covered, but you'll see that the real key theme of this was the trend starting and trend ending, and how he weaved climaxes into this. There were numerous mentions of the climaxes. First, this here was a climax. That's one. That's this one he didn't mention, but I mentioned it here. The second one that he mentioned was up here. That's two. The third one he mentioned is here. That's three. The fourth he mentioned is here. For the fifth he mentioned is here. And the sixth he mentioned is up here. 6 points he had mentioned climaxes within this trend. So that's noteworthy. Then, what else did he mention? He mentioned the shortening of the thrust and the clustered closes. He mentioned that climaxes immediately being followed by volume off the bottom or the change of behavior, right? So climax, change of behavior, and then the clustered closes or the pullback to test, and a number of other things. So what's the point that I'm trying to make? I'm trying to make the point that climaxes are very important. Not only do they terminate trends, as they did here, terminating the downtrend and helping start the uptrend, but also terminating the uptrend and helping start the downtrend. Not only that, but they also terminate swings up here. Swing high and swing low have been terminated by climaxes. And also that climaxes have the tendency to be followed by changes of behavior. And those changes of behavior indicate that the heavy selling or the heavy buying has passed, and they confirm that they don't confirm that the trend has changed, that you would need additional testing. Like over here, you had a climax followed by a change of behavior that confirmed that the climax has passed, and then you had tests, meaning a pullback to around the same level on low volume, indicating that the liquidation has passed. And when the liquidation is passed, the market is ready to really move. And you have what's called a springboard. And from that springboard, you have that higher high that initiates the new trend. Similarly, over here, you had climax and a change of behavior. The change of behavior indicated that the climax has passed. And then you had some attempts here to go up, but didn't go up. And instead, you had that backbreaker down bar and that low over here, right? But if you ask me, when was this bar broke the back of the trend, right? But that lower low didn't come until right here. At that point, there's no doubt that there's a trend change. All right. So this story is about climaxes and how they operate. And yes, we had indication of distribution. Talked about that a little bit. Absorption over here, and that's about it. All right, folks. We'll continue either tomorrow or the day after. Have a good weekend. Bye. How do I shut this?